Good morning, everybody. Hope you had a great evening. We're in a warm-up now here for a week or so. The jet is supposed to move back up into Canada and bring at least seasonal temperatures down here for us, which would be around 50 degrees. No moisture in the forecast. The hard red winter wheat crop is getting stressed. It does need moisture. And hard red winter wheat is an important commodity around the globe, especially outside of especially in the Middle East and parts of Africa, where if they don't get it, they can experience riots in the streets. So you can lose your government over hard red winter wheat. Okay, we've got pretty good support down here in this 20 area, give or take. And the last spill was from 28 yesterday. So we're kind of 28 to the buck is resistance, and support really is down here in this 12 to 17 area. So our first little band of support is going to be 16 to 20. So our first buy is 17 to 21. Our second buy is 9 to 13, playing off this high volume area. Resistance is at 28, so 27 to 31, sell 1, and then sell 2 will be 3 to 7. Okay, probably the biggest news early this morning will be Fisher and Yellen speak, and they'll try to set a tone, but I don't think anything will change. Fisher might float a trial balloon about raising interest rates. Right now, the Bank of England and the Fed are expected to raise interest rates starting in the second quarter of next year. I don't see how that's possible given the deteriorating economic conditions around the globe. And the stock market, the breadth in the stock market is just coming out the bottom. Very, very few stocks are holding the stock market up right now. Today we have construction spending. Nobody will pay any attention to that. They will pay attention to auto truck sales, 16.5 million. Given the collapse in the energy sector, this is the one bright spot or continuing bright spot in the economy. And a lot of it is supported by subprime loans, especially through General Motors cars and deals. General Motors can outcompete anybody out there. Most people don't know this, but the $50 billion worth of support that General Motors got in the form of loans, etc., has been forgiven and will not be a taxable event. So GM's got a huge advantage over Ford and the other automobile manufacturers, and they actually do build much better cars these days than they used to. So the money at least has gotten better transportation out there. But this is the one bright spot in the economy. We'll find out today what Cyber Monday brought to the internet sales, but supposedly retail sales are minus 11% from at the stores from last year. So the economic news continues to be mixed to negative for the most part. Every now and then we get a good piece of news, but not consistently as we do the news that shows slowing of the economy. So I don't think Fisher and Yellen can say much this morning to upset the apple cart. The one thing that they want to keep going, and the only thing that they've been able to successfully achieve, is a higher stock market. And the psychology associated with that, well, the stock market's good. That means the economy is getting better or expected to get better. Maybe I'll get a job. So they have to tread very, very lightly when it comes to what they say and what they actually do to the economy. So see a trading range market today. Basically, if the E-mini breaks hard, financials will rise. E-mini rallies back, financials are probably headed lower. Pretty good support in the 12 to 20 area. And tomorrow is the ADP number. Friday is the unemployment number, and those two events tend to hold the market in check until the non-farm payroll numbers are out. So we'll look for 20 for a trading range today with support below 20 and resistance definitely above 127 even. Okay, the knob spread is exactly where it was on the close yesterday. Maybe came back a couple of ticks, but not much. That shows that the long-term players aren't buying in anticipation of higher prices yet in the financials. So again, you can see we have this attractor down here at 4102. Got a break at 13. We have an attractor at 20. So 17 to 21, it's aggressive, is buy one. And then our buy two is going to be this 13 to 9 area. And I like the buy two area a little bit better because of the possible contraction in the knob spread. 31 to 03 is sell one. And then leaning against this ledge up here, 7 to 11 will be sell two. And it's been pretty easy to hit our number 2 levels for most of the time. Not always, but most of the time we can get to it. Okay, gold and crude last night and currencies came off. The dollar strengthened. The issue is, can they break today? And we had, what, an $80 run in gold yesterday? Big numbers. So looking, and we came in saying the ideal trade would set up if it started to sell in London, you wanted to get short. So you got this London high at 1205. Last rotate up is at 98, so 98, 1200 will be sell one, leading against those single prints. And then 5 to 7 will be sell two. The breakout came from the 85 area, so our first little support is going to be down here in the 90, 92 area. That's a pretty, that trade has to work quickly, and then 85, 87 where I am more comfortable. A lot of breaks in the market in that 85, 87 where highs or lows have come in historically. 9092 is playing on some strength. 1200 to 98 to 1200 sell is leading against a pretty round number. And 5 to 7 is where resistance is in the overnight session. Dollar's up overnight. Major currencies are lower. The euro found sellers in London. We had hoped yesterday to sell the 85 to 95 area. 80 basically held overnight. London's high is 58. We're currently at 29. Last rotate is up is at 42. So 40 to 50 is sell one. Pretty aggressive. And then our 60 to 70 is sell two. I think we're going to get stops beneath 20. So we'll make 10 to 20 buy one. And then 24 even plus or minus for buy two. I really don't like the long side in this market for reasons that you probably get tired of hearing me vocalize. And the major reason is I just don't want to fight the central bank. They've told us that they want the euro lower. And over time they get their way. What's been interesting is that the European Central Bank hasn't really had to make a commitment to the market as far as purchases go. That's going to end sometime. There's talk that they'll add sovereign debt to their purchases, uncovered bonds. They've been buying covered bonds where there's hard assets behind them. So the we'll have to see. The ECB is a master at saying they're going to do something, then not doing anything, but saying, well, we didn't do it last month, but we'll do it again next month. We got these single prints here down in the 66.75 to 67 area. We've got single prints here at 67. Looks like 65. So 75, 68 is buy one. very, very aggressive. That's assuming a retest of this 75 area does hold up. The 66, 75, 67 area is pretty cautious buy. On the sell side, we have a London high at 69.19. We have an overnight session high at 69.34. P and Q stop here in the 50 area. So 50 to 75 is very, very aggressive. Sell 1, and 69, 69 and a quarter is sell 2. It's pretty interesting that we're not getting a lot of news about energy out of the Middle East right now, where they're holding the production levels at the same. They're fighting for market share, and like I've seen it happen. This is the 4th time now when OPEC fights for market share, the bottom falls out of the market. They don't care what the price is. They're going to have 25% of the OPEC share, or whatever their official quota is. And that makes for lower prices quickly. Usually it's over in a couple of months, so the issue right now is 60 support, is 63, 65 support, is 67 support. The CME has raised margins for the 2nd time. That usually dampens volatility, and it takes the small spec out of the positions they have to liquidate, i.e. cover their shorts in this case. That tends to slow things down, so usually after the exchanges do raise their margin requirements, things do start to slow down. And so this is the 2nd bump by the CME. So my guess is that over the course of this week, the volatility will start to come out of crude. Okay, looking at the E-mini, best resistance is in our 60, 66 area right up here, where you got a higher low than yesterday. We do have auto and truck sales news today. No one will pay any attention to it. And we've got Fisher, Yellen speaking this morning at 8:10 and 8:30 respectively, Eastern time. So auto truck sales at 16.5. That's a pretty healthy number. And it's the same sector that supported our economy ever since 2009 as automobile sales came back. So we got a very, very clean break up here in this 63 area. We're at 55 right now. We got a high, so 59.61. Sell 1, 64.66. That's where resistance is. Sell 2 on the buy side, 51.49. Buy 1. And buy 2 will be in our 45.47 area. So let's look for a trading range today. If 60 comes out, probably best support is in that 65 area. If 60 holds, then our support at 50 is suspect. So we'll just have to adjust on the fly. ADP's number tomorrow, unemployment on Friday. Again, it tends to hold markets in check. I think the crude oil will be getting a pretty hard watch because it is a significant portion of the stock market, and they will pay attention to that. Okay, it'll take about at least 15 minutes to get everything up and posted. I'm going to get busy on that. I will see you as soon as I can.